All right, hello everybody. Welcome back to another edition of the Forex Market Preview. I am your host, Jason Stapleton. Thank you so much for being here. If this is the first time that you're joining me, welcome. If you like this video, don't forget to subscribe and sign up and leave me a comment and all of those good things. And if you are one of the more than 22,000 people we have now who are subscribed to the YouTube page, or the tens of thousands of you who are on the list to get this email every single week, thank you so much for doing that. I really appreciate you guys being here as well. And today we're going to talk about just a couple of things. We've got several patterns setting up here going into next week. And Constellation, the pattern software, is only about 10 days away from release. We're going to be starting the process for showing you guys some training videos on that and giving you the insights and a full explanation of how the software works and all of that in about 10 days or so. And this is the actual pattern software. And what we've got here, guys, I think we talked about this last week. This is Canada Swissy on the daily chart. I've got a nice cipher pattern set up here, and we're just about ready to complete here around 138.79s. And if the market comes up here and hits 83.79s, that's right near the 84 even handle. Look left, there's your swing high. Your stops are going to have to be above this swing high. So if I grab my little crosshairs here, we're going 83.36s, 83.40, probably 83. We probably want to get above 8,600 here. So probably 86.05 or something like that for our stops. And then when we look for our targets, we're going to go swing low to swing high with our Fibonacci retracement. We're going to assume we stop here on a dime at 83.79, and we're going to look for a retracement down into that 382 and that 786 retracement. You look at that 382, look left, there's your structure, and then just below the 618, you've also got a little bit of structure down there as well. So that's going to be a nice trade, potentially, on Canada Swissy if we can get up just a little bit higher. Euro yen, we talked about this one. Market came back down into the lows here. At the beginning of last week, we talked about that. The market rallied up out of there, and I said, hey, I was short. I said there's an opportunity here for the market to come back down, and there's an opportunity that both people could be right on this. That was what we talked about last week, about how it didn't matter whether you were trend or counter trend, whether you were long or short, depending on your time frame and your rationale for entering in the trade, both traders can be right, both somebody who's long and short. But what we're looking for here is that rally up into the 382 at 140.02s. We almost got there. We got to 39.81s last week. Then the market saw a reversal. And we're probably going to come back down here and test 38.74s. I'm sorry, 137.84s. So we'll wait and see what happens with that. But also right underneath of that, we've got another bat pattern formation at 137.08s. So if we get down, the next real buying opportunity for you guys who are looking, this will be a really good risk reward on this trade at 137s. So keep an eye on that on Euro Yen on the daily chart. Then on dollar yen, massive amount of consolidation. We tried to make a little bit of money on this on Friday in the syndicate, and didn't actually end up making anything on it. We exited the trade for about a pip or a half a pip of profit, which is what we consider a break-even trade. But we do have some smaller pattern stuff here on the daily chart. We've got a potential bat pattern here that completes at 101.04, basically the 101 even handle. And guys, those even handles are kind of important. Anytime you can get a trade right there at that even handle is a nice thing. It's also down at the lower end of this range, of this structural range. So the market comes down into that area, potential buying opportunity. If we happen to reverse here and go back north at 103.70s, we're going to see a bearish bat pattern, which is going to be a selling opportunity for us. And then there's actually a really big cipher pattern up here, a little higher at 104.42s. Now, there's a lot going on here, but basically this goes back to what we've talked about several times, which is bracketing your trading opportunities. And you're basically looking at a scenario where you could either buy up 101s or you could sell 103s. And that way, it doesn't matter what this market does. You already know what your plan is by trading two simple patterns. This is actually the same pattern. It's a bullish bat pattern and a bearish bat pattern. And if all you do is look at these two patterns and you say, okay, I'm going to buy it when it gets to 101 or I'm going to sell it when it gets to 103, you're going to be in a good position. And this gives you, it eliminates, what it does, guys, is it eliminates the confusion. It eliminates any, I guess, frustration about what you should be doing, especially in a market that's been so consolidated. I mean, if I consolidate this up and look at it, we've been in a very narrow range here for a very long period of time. And this is what I say. Most people look at this thing and they don't know what to do. The things are, it's consolidating, it's confusing, it's somewhat frustrating that the market's in such a narrow range. But really, if you know what to look for and if you're prepared to take advantage when the market actually moves, you can find these trades where it doesn't matter whether the market goes up or down. You know exactly what your plan is going to be. So it'll be interesting to see what happens with dollar yen going into next week. And then we got some stuff over here with Swiss yen, which I won't really bore you with anymore. And this is just a couple of the opportunities that we had. I'm just showing you guys a few. There's actually I cycled through all the charts. There's a lot of other opportunities, but as I said before, I'm trying to keep this to a minimum so that we can focus really in on more like in on one or two different concepts or ideas for the week. So here we have Aussie dollar on the daily chart, and you guys can see the resistance level. We've been closing at that resistance level all the way down the line, and one of two things is going to happen here, all right? Every time the market has come into this resistance level, it has been beaten back. It has been beaten back once, twice, 3 times, 4 times. This would be the 5th time that it would be beaten back if we see a reversal on Sunday/Monday morning. Okay? Going down onto the hourly chart, that was the daily chart. What are we looking for here? Well, market makes a downward move, then we see a little half-step rally. Downward move, little half-step rally. It's going to be interesting to see what happens here on Monday. I will tell you guys that, oops, that's a weekly chart. Get on the daily again. I will tell you guys, this market signals bullish, all right? But that doesn't mean that we're going to be bullish. What I'm saying is the majority of the time when the market sets up a look like this, oops, hang on. When the market does something like this, it tends to indicate a bullish move. But that doesn't mean that you cannot find some short-term profits here on the short side. And we've been talking in the syndicate about how we're dealing with taking, essentially structural plays that are on a higher time frame and trading them on the daily time frame. And in the syndicate, the two things that we've been looking at are relative strength and average true range. In taking a look at patterns that have, or taking a look at on days when the market has already made 100% of its average true range move and is moving up into a structure level. And then we use that daily time frame to make our entries on. We've been very successful at that. It's been going very well. Oh, excuse me. But this particular type of setup would generally indicate a break to the upside. The same thing that we saw on Canada yen. Again, we looked at this. I played this thing for forever. I played it to the downside. I played it to the upside. Right? We talked about this. And finally, boom, the day before we saw the big rally, I ended up buying again, and that market rallied. And we saw the rally, and now we're into an area. I already took my profits off, and now we're waiting to see what's going to happen next. But this is a more obvious type of upside breakout. But Aussie, this could easily be another, a breakout to the upside. You could also look at it in terms of the W type of move that we saw in the euro right before the major crash, which looks something like this. Okay. And if that's the case, then this could be a shorting opportunity. So I'm bringing this to your attention because you can either play this to the short side or the long side, and you could be right. I think in my opinion, there is about a 50-50 shot that this thing is gonna return to retest lows around 93.22s from 94.20s. So we could get a 100 pip move south or a 100 pip move north. I think there's about a 50-50 shot of either one of these things happening. What we're going to be looking for when this market opens is, number one, where does it open? Does it gap down? Does it gap up? If we gap up above the previous high, that's a very dangerous shorting position. We definitely want to leave that alone. But if not, then we're going to look down on the hourly chart and we're going to try and make a determination as to if or when we could short this market. Now, if I'm on the daily chart and I pull up my average true range, there it is. Right now, this 47 pips is the average range that this market moves in a given day. 47, that's it. We call it 50. Call it 50 pips. So that means if I'm down on my hourly chart, if the market opens right here at 84.20s, right? That means 84.80. That'd be 50 pips, right? Nope. 84.70 would be 50 pips. 84.70 is here. Okay? Let me draw on a line. It's helpful if my math works. 84.70. Boom. There's going to be that's a 50 pip move. Now, where is that? Boom. That's above the highs. So if we go back out to the daily chart, right there, if we make a 50 pip move straight north from the open, that's definitely going to be the breakout that we were looking for. If, however, we get a little retracement, let's say this market retraces 20 or 30 pips. We get a drop from 120 to say, down here to 95s. So the market does something like this. And we get a retracement down in here to about 95 or so. And then we get the rally. Well, now we could easily see a move back up into this resistance level and be at or near 100% of the average true range of the move. And if we're at 100% of the ATR coming back up into this resistance level, that might be a nice place to look to sell. Otherwise, what you're going to simply do is you're going to go out to your daily chart, you're going to wait until the end of tomorrow, and you're going to see, does this market break out or not? And if it does break out, then you're going to look for a potential press back down into structure. So what you'll look for is something that looks like this. Market breaks out. Okay, up to the upside, doesn't have to be that much. It could be just a little bit. Then we come back down in. Where do we come back down into? Look left. Structure leaves clues. Previous structure resistance should become support. And we'd look to buy up that move back down into support. So that's basically what I'm watching today. I hope that this has been valuable to you guys. Lots of stuff on the pattern formations, a little trade on Aussie dollar that we looked at, and trying to use a little bit of knowledge and information for those of you who follow me frequently in the discussions that we've had previously about different pairs. If I bring that stuff back in, other things that we've talked about, I hope that that helps. It also benefits if you watch every week, because if you watch every week, then you're in the know on all of the things that we're discussing, that we've been discussing over the past several weeks. So, and if you're new, don't worry about it. The more you come in, the more you see what we do here, the easier it will become and the more you'll begin to understand. So leave me, hit that like button, hit that share button, leave me a comment. Thank you guys so very much, and I will see you guys back here next week for more great trading ideas and other stuff. So I'll talk to you guys soon.